Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
Today we're going to break down an absolutely killer trading pattern. Seriously, once you get this, it feels like you've been given a secret weapon. It's called the Liquidity Trap Reversal Pattern, or LTRP for short. And trust me, it has the power to completely change how you look at market reversals.
I mean, we've all been there, haven't we? It's that gut-wrenching, incredibly frustrating feeling that the market is personally out to get you. You see a perfect breakout, you get in the trade, only to get stopped out almost instantly before the price does exactly what you thought it would. But what if that wasn't random? What if that was a trap, designed to do just that? So in this explainer, we're going to flip the script. We're going to turn you from the victim into the hunter. We'll start with that trader's nightmare, then we'll dissect the anatomy of the trap itself. After that, and this is the cool part, we'll show you the one simple signal to spot it, walk you through exactly how to trade it, and finally help you totally master this reversal mindset. So let's get right to it. Is the market rigged? It's a question every single trader has asked themselves after getting stopped out by one of those violent reversals. The truth is, it's a bit more complex. It's not really about being rigged. It's about understanding who needs liquidity and, more importantly, where they go to find it. And here is the absolute key idea to wrap your head around. When you placed that stop loss or that breakout entry order, you weren't wrong about where the market was going. You just became the fuel. You were the liquidity that the big institutional traders, the smart money, needed to fill their own massive positions.
So, how does this trap actually work? How is it set? Well, let's go behind the curtain and look at the mechanics. We're going to see how these moves are often intentionally engineered by the biggest players in the game.
So this is the LTRP in a nutshell. It's a setup where market makers deliberately shove the price through a really obvious key level. Why? Because they know there's a ton of orders sitting there, stop losses from traders already in a position, and entry orders from breakout traders waiting to jump in. This flood of orders creates the exact liquidity they need to fill their own huge positions without messing up the price. You'll see this trap unfold in three very clear stages. First, you have the inducement. The price just kind of hangs out near an obvious level, tempting everyone with what looks like an amazing breakout about to happen. Then, stage 2, the sweep. The price quickly stabs right through that level, grabbing every single order it can. And finally, stage 3, the rejection. The price slams back in the other direction, leaving all those poor breakout traders completely trapped on the wrong side. Okay, now for the most important part. How do we spot this thing in real time and, not get caught in it? Well, the secret is surprisingly simple. It all comes down to one single detail on your chart: where the candle closes. This is the million-dollar question, isn't it? How do you know if a breakout is for real or if it's just a fake-out designed to trap you? The answer isn't in how fast or explosive the move is. It's all about how that move finishes. And here it is. This is the difference. A real breakout shows real strength. The body of the candle, not the wick, the body closes firmly on the other side of that key level. But a trap? In a trap, the price only pierces that level with its wick. The dead giveaway, the crucial signal, is that the candle body closes all the way back inside the previous range. That close tells you everything. It's screaming that the breakout has failed. And you know what? The longer that wick, the stronger the trap. That wick isn't just some random line on your chart. It's a footprint. It shows you there was an incredibly aggressive rejection. And more importantly, it shows you exactly where tons of other traders are now trapped and hurting. That is your signal for a potentially massive reversal. All right, so we know what the trap is and we know how to spot it. Now let's get down to business. How do we actually trade this thing? Let's break down the exact strategy, the setup, the entry, and where you're going to take your profits. So the setup really comes in two flavors. First, you've got the bearish LTRP. This happens at a key resistance level or a swing high. You're just waiting for the price to poke its head above that level and then close back below it. That's your signal to go short. And on the flip side, you have the bullish LTRP. This one happens at key support or a swing low. Price sweeps below the level, but then closes back above it. Bingo! That's your signal to buy. So here's the game plan. Your entry needs to be aggressive. You get in the moment that trap candle closes. Your stop loss, it's super tight and makes perfect sense. You place it just beyond the end of that trap wick. I mean, if the price goes back there, your whole idea is wrong anyway, so you're out with a small loss. And your target, you're aiming for the other side of the range, the next big pool of liquidity. Now, because your entry is so sharp and your stop loss is so tight, the potential risk to reward on these trades is just phenomenal. It's not uncommon to find setups that offer 5 to 1, 10 to 1, or even higher. And why is that? Because you're not just guessing a reversal. You are literally entering at the precise moment the market has shown you its hand. Okay, let's wrap this all up by focusing on what's maybe the most important part of all. Mastering this isn't just about learning a new chart pattern. It's about making a fundamental shift in how you think as a trader. So let's just recap the whole thing with a simple checklist. Step 1, find an obvious level where you know liquidity is building up. Step 2, be patient and wait for the price to sweep that level. Step 3, the most critical step of all, confirm that the candle body closes back inside the previous range. And if all those conditions are met, step 4, you pull the trigger. So from now on, stop being afraid of those violent moves that hunt for stop losses. Instead of seeing them as a threat, I want you to start seeing them as a massive opportunity. Because when you learn how to spot the trap, you stop being the liquidity and you start trading with the smart money. You stop hunting for your exit and you start hunting for your entry.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.